Yes guys, I hope you're all keeping well. Welcome back to another Wick Wednesday. This past week has slightly been very slow in terms of the Forex markets. Very up and down, especially due to fundamentals that have been taking place in the markets. Obviously, as you know, there has been Brexit talks and news going on for the past couple of years, which is a very long time. I don't know what they're doing. They don't really, or they can't really make up their mind. New prime minister has come in. Even himself slightly cannot make up his mind. He is a bit more, strong-minded compared to the previous prime minister we had in the UK economy, which was Theresa May. And he seems to be getting a lot more done in the process compared to Theresa May. Now, yeah, what we can see in terms of the whole Forex market as well. So that is one of the major headlines that has been, taking place over the last couple of years. But recently, which has been going on for quite some time as well, but has been heating up recently, is the US versus China trade wars. Now, what is happening is obviously China is the largest exporter in the whole world of any kind of goods out there. Yeah, whether it comes to clothing, whether it comes to plastics, whether it comes to anything. Yeah, China is the biggest exporter of pretty much anything in the whole entire world and everything. Yeah, so what's happening is US is probably the largest consumer when it comes down to China. They are their biggest customers. Yeah, most of the China goods that get sent out across the world, most of them go to the US. About 50%, of everything produced in China gets sent out, and US is their main buyer for all their goods. Now, what China are doing is raising the tariffs every time a certain limit has been hit. So I'll give you an example. This isn't really what's taking place, so don't go by my example, but I'm just giving you an example of a scenario that is taking place. So let's say the US have a certain limit of buying $1 billion worth of goods from China. Yeah, and if they buy $1 billion worth of goods from China, everything up until that billion will get charged about 2% fees. Yeah, exporting fees. If they go over that billion, then it goes to 3% fees. Yeah, so obviously every single year US increase the amount that they import from China, and a lot more has to be made for China to be sending out to the US, hence why they want to increase it every time a certain limit has been hit. And the reason why China keep increasing it is because they have to hire new staff, more staff, they have to pay more people, they have to have bigger facilities, buy more machinery, and etc. But what US are saying is that, come on, we're buying so much from you, the price should start to decrease over time. Why does it increase over time? Does that make sense? It doesn't work out in a business perspective for the US. But there's not really much they can do, because, like I said, China is the biggest exporter. They're not going to find any other exporter as large as China, so they kind of have to go by what they say, or the rates that China give out. Also, China have to kind of compromise with the US at the same time, and the reason is because they have to look after the people who are paying them the most money. Yeah, if the US are giving them the most amount every single year and every single month compared to the rest of the world out there, come on, they have to kind of look after them at the same time, if that makes sense. They're making enough of them already. They kind of, where I'm coming from, they need to compromise as well in the process. So it has to go, they both need to come to a really good mutual agreement, and that is what is taking place right now, that they simply cannot come to a mutual agreement, mainly based on Trump's ego and pride, and secondly because of China's pride and ego at the same time. They are the biggest exporters, so obviously their chest is going to be slightly larger than any other exporter out there. And US being the biggest importer in the world, their chest is also going to be slightly larger out there. So it's like two egos fighting against each other. So there is going to be a bit of a standoff once in a while, and there will be a lot of disagreements in the process as well. Right, so let's see what effect this has had on the charts. Yeah, so we're going to run through a few currency pairs and let's see what has been taking place in terms of technical analysis that fundamentals has affected. Let's go into some charts. So as we can see, Great British Pound is my favorite currency, and is GBP JPY is my favorite currency pair. I've literally studied this for the last few years inside out. I've learned everything about the pound. I've learned everything about the Japanese yen, and I pretty much know when it's too high, when it's too low, and what to do next from here on. So looking at this, pound has been rallying ever since this morning, non-stop, and in fact pretty much rallying this whole week. Did cause a slight pullback this week, but yeah, just gained enough momentum to push straight back up once again, all the way up to the 141 200 mark. Well, but it did actually push to 300, but it had just about spiked there. It is entering a major sell zone, so we are going to be very careful. But if I look back at the daily time frame, however, I know it's slightly messy up there, but hold on. So if we look back at the daily time frame, we can just pretty much see GJ messing around in this range for the past month. Yeah, non-stop for the past month. GJ has been going up and down in this range non-stop. Yeah, non-stop, and there has been, you know, no breakout of this major range, no fake outs of this major range, nothing of the sort. Yeah, so like I said, this whole week we have been seeing GJ push upwards. This may be a bit of a liquidity grab, may not be too sure, or it could just be, you know, all down to fundies. Yeah, fundamentals. There is some more votes that are taking place this evening, and there has been votes pretty much over the last couple of months as well. This also may be the reason why it has been ranging. It goes up and then it comes back down, then it goes up, then it comes back down, but always messes around in this range. This may be, like I said, due to Brexit, because a final decision still has not been made yet. Yeah, and once it does actually get put into practice and into play, we can start to see major moves either towards the upside or towards the downside. And if it is highly positive, I personally think it could even push up all the way to 150, which is a very far place, but it's still looking possible for the Great British Pound if, you know, the economy and we do exit the EU very successfully. If we don't, I can see back down all the way to 130 again, 130 or 150. Yeah, either way it's gonna happen. Moving forward, looking at GBP USD, and this has been pretty shaky. I still have my downsides target of 1.28 when it comes down to the Great British Pound against the US dollar. If we look at this technically, let me just extend this out where it's supposed to be sitting. So yeah, this is a major sell zone, and as you can see, prices did end up hitting this sell zone once again, retracing off it, hitting it again, and by the looks of it is starting to pull back now. And over the next few hours we should see this small support area of 1.287 starting to be respected as time comes along. Obviously there is still some time in this candle, 3 hours and 42 minutes, because it's a 4-hour time frame, and we're going to look at everything more 4-hourly, more slightly longer term, not too longer term however though. Yeah, next, Euro USD. So this is actually a quick one. Euro USD literally bounced right near the TP that I had set it at, and has come back up, but by the looks of things it is starting to move slightly slow, but possibly when momentum does kick back in, could end up hitting this area and then bouncing straight off towards the upper side. So yeah, do keep an eye, very close eye on the euro against the dollar. Euro actually hasn't moved much today at all. There was also some news about it as well today, fundamental news at investing.com. Investing.com is a very good place for you traders to take a look at what news is going to take place in the market, what news has taken place in the market, and how to, you know, interpret it for how you're going to take your next few trades and how, what to be more cautious of over the next few hours and over the next day or week or so. Next, looking at the euro against the Japanese yen, because that is slightly more active, and as we can see, it has hit this very, very strong resistance area at 120,400 and has pretty much bounced back and keeps bouncing back. But as we can see, there is a lot of upside momentum with the euro against the Japanese yen, and I'll be honest, everything against the Japanese yen has been strong today. Yeah, very strong today, pushing upward against the Japanese yen, and the Japanese yen pretty much has been dropping all day. I'm not too sure why it's losing momentum, but people have been pumping their money out of safe havens today, including gold, including Swiss franc, and including the Japanese yen, and pumping it into other currencies. Yeah, so if you are taking a look at anything JPY based, just know it is being pumped up only because JPY is being pulled out. Yeah, so investors are pulling out of the JPY and the Japanese economy as we speak. Next, let's take a look at USD JPY, and as I mentioned, of course, like I said, US dollar or everything against the Japanese yen has been rising, but obviously US dollar especially has been shooting today, non-stop being shooting ever since 6 a.m. this morning, or 6 a.m. yesterday morning. Everything has been shooting up and has been very, very bullish ever since. It did end up passing this very strong resistance area and is above the resistance area, so we can see over the next few days and weeks, I strongly believe that the US dollar will start to gain a lot of strength as time comes along. Finally, looking at gold, gold has been dropping pretty much all day. Did do a major shoot up yesterday, but then ever since then started to come all the way back down, and obviously the reason is strongly based not on technicals but on fundamentals. And like I said, momentum has been coming out of all safe havens, liquidity has been being pumped out of all safe havens, and gold is obviously a very safe haven as well. As gold is a very safe place for investors to put their money when all else fails. But yeah, anything else, I will constantly update you guys with. I hope this has been a really, really good session. We've taken a short-term look at all Great British Pound pairs, not all, but the major Great British Pound pairs, the euro and US dollar based pairs as well. So US dollar, Japanese yen has been very strong, and we do see it gaining more momentum as time comes along. Gold has been dropping because of the safe havens, and same with the JPY as well. Everything JPY based has been rising non-stop. Thank you once again for plugging into another session of Wick Wednesdays. It's been really, really informative. Next week, like I mentioned, I'll add a lot of cool and fun stuff, as I'll be visiting this dinner which I've been invited to tomorrow, and I'll give you guys a really, really good update on who I meet, what I've learnt from the certain individuals that I do meet across the world, and tomorrow as well. But yeah, once again, thank you for plugging in. Please do like, subscribe and comment. Trust me when I say this, your views and love are highly, highly appreciated. And anything else you'd like to see over the next coming weeks, do mention it in the comments. But other than that, once again, thank you so much, and I'll catch you guys on the next session of Wick Wednesdays.